Oil steady this morning after sliding below $100 a barrel on Tuesday as escalating fears about an economic slowdown rippled across markets. For more, let's talk to Stapczynski, our energy reporter who joins us now. Stephen, talk us through some of the latest movements then on oil. Mark and I were talking about whether there's new news flow here or is this a continuing reassessment of global growth?
You know, it really is a case of bulls versus bears, and the bears have been winning over the last month. There is this view that this recession, with the Fed bringing higher interest rates, that we will see some sort of slowdown to economy in the United States. European banks also following through, as well as COVID outbreaks in China and potentially the COVID zero policy continuing in China, kind of pushing down oil prices over the last few weeks. But at the same time, you have OPEC coming out with a report this week, or today, that was actually quite bullish. It showed that the market will remain pretty tight through 2023. They're going to have to add more supply into the market. But the fact of the matter is, OPEC has really struggled to hit their targets over the last few months. And really only Saudi Arabia and maybe the UAE can add more to the market. So it is the fundamental view where the market is tight versus a view that there will be a deep recession destroying demand later on. But that's still not to be seen.
So, Stephen, as you kind of say, OPEC seems to have lost credibility over the last year as we've come to the biggest oil crisis in perhaps 40, 50 years, which I think is a little bit ironic. And the other story is obviously the intense natural gas crisis. Now, if you're a macro tourist like me, you only ever cared about oil before. You didn't really know about gas. I'm sorry to offend you in that because I know you're a gas expert. But tell us what's happening on the gas situation in Europe. Germany's trying to seek out other supply sources. How is that going? Will it be successful? Can they survive an extreme cutoff by Russia if it happens?
So gas situation is very, very bad. Even if there were some sort of recession in Europe, that wouldn't curb demand enough to really hit where they have to be. Germany is looking quite intensely to find liquefied natural gas supply to replace Russian pipeline flows, but it's not so simple. Russia makes up roughly about half of the oil consumed in Germany, whereas LNG at most could maybe make up a third of that gas consumption by winter, maybe into next year. That is a huge amount, don't get me wrong, but it's going to be very challenging for Germany to find all those molecules in the market because it's already tight. Things are difficult where they are. Cutting Russia out of the equation, where's Germany going to find that supply from? Yes, they can perhaps go to the United States, go to Qatar, but there is little extra supply that can come from the market, and they're going to have to take supply away from countries like Pakistan, India, China. It's going to be a really deep fight.